I'm getting my money back in the refi. All that works really well. Now let's start looking at the opportunities.
Yes.
Now you have to look at the opportunity through the buy right, operate, and the exit. That's a separate framework in and all of itself.
Welcome to the Next Level Income Show, where it's our goal to take your income, your investments, and your life to the next level. I'm your host, Chris Larsen. If you haven't yet, get a copy of our book for free at our website, nextlevelincome.com. That's www.nextlevelincome.com. Just click on the book link, and I'll even send you a copy if you put your address in. On today's show, we have Gino Barbaro of Jake and Gino. He's an investor, certified money coach, entrepreneur, and podcast host. As an entrepreneur, he has grown his real estate portfolio to over 1,900 multifamily units and $450 million in assets under management. His mission through Barbaro 360 is to empower families to build lasting legacies by focusing on restoring traditional values in family, life, finance, and helping families create a healthier relationship with money. Gino is also the best-selling author of Happy Money, Happy Family, Happy Legacy. He resides with his beautiful wife, Julia, and their 6 children in St. Augustine, Florida. And today we're going to talk about the framework that Gino uses when he looks at deals and how you can use his framework as well to build generational wealth. This is a fun podcast. Stay tuned. Gino, welcome to the show.
You know, Chris, I've been thinking about the title of your show, Next Level Income. Where did that title come from? That's what I'm really curious about. I bet you never started a podcast with a question to the host, but it's really been gnawing at me. Next Level Income, because I love the title. I love it. How'd you come up with the title?
Well, thank you. Yeah, and I appreciate you saying that. And I got to give some credit. We actually today, as we're recording this, we actually just released our 300th episode, and I was kind of celebrating with our team. And my good friend Caleb inspired me to start the podcast, and we came up with the name together. Unfortunately, Caleb passed away a few years ago, very young age from cancer. But yeah, as we talked, what we found is, what started as a syndication business in 2016, after a few years, I realized that there really needed to be an education component because, there was young people reaching out. They're like, hey, I'd love to invest. I'd love to get to the point where you are, but how did you do it? So I started to record, I started to put blog posts together, and Caleb came to me and said, you should start a podcast. And I'm like, I'm an engineer, man. I'm a numbers guy. Like, this isn't really my thing. But the more I thought about the need that was out there, I said, yeah, this would be good for, our audience, our clients, people out there that want to do this. And, it's a way, as you've done a tremendous amount on the education side, to leave a legacy. But, what I found was no matter where you are, there's always another level to your income. And the show, it's not just about, how to invest in alternative assets. It's about how to make more money. It's about how to, create passive income to give you more freedom. And one of the topics I know is very near and dear to both our hearts is, how do you create that education, that not only the generational wealth, but also generational education, so you're able to give your family the ability to continue to make an impact in this world. And that's how the Next Level Income Show was born.
Thanks for that. I like the idea. And I think when I heard next level, I sort of knew it already internally. Okay, you hit a certain level. You have to get to the next level, the next iteration of yourself. You need to grow. And that's why you're not born with $17 million. That's why you need to scratch and claw your way up. And then a lot of times you lose that money, but you've learned. But then you can get to that next level from the experiences and from the teaching that you had, and then you continue to go up to the next level. So I love the title of the show.
Yeah, well, thank you very much. And you gave me a chance to share a little bit about that. I'd love for you to share with the audience, Gino, a little about your background. A lot of people may be familiar with you, but for those that aren't, love to share a little bit about your progression to where you are today.
I've gone through a lot of levels. But I'm always looking for the next one because as an entrepreneur, you sort of get bored. You sort of get stagnant. You're either growing or you're dying. And I don't mean just next opportunity to make money, because money is just a result. If you get really good at something and get to that next level, well, there's just more money is going to show up. That's the reality. I started out as the pizza guy. I had a restaurant in New York for years. My father had one. I went to college. I opened up the family restaurant. We had it for years. In '08, everything changed. The economy changed. I saw that food habits changed. I saw that I was working harder, making less? Can anybody really, resonate with that? I'm sure that a lot of people listening right now can. And I was just frustrated. I said, I need to do something different. I need to level up. I was that person who was just not content anymore. And that's the only reason why I think I became successful. I was pissed. I hated what I was doing. I read T. Harv Ecker's book, The Secrets of the Millionaire Mind, and he just made me realize that it's all about my responsibility. It's all about the control in my life. It's all about the actions that I took up until that point that got me there. And if I want to level up and get to the next level, I need to take control of my thoughts, stop blaming everything that's outside world, because most of it is interior that holds us back. And I needed to learn certain skills.
Man, I love what you just said there, Gino. And we were talking about family before the show, and you got me beat by a multiple of children here with six in your family. We only got two boys, but I was talking to my younger son this past weekend. Actually, it was last week. They both play lacrosse, and my younger son was talking about how a practice didn't go well, and he was actually blaming one of his teammates. And I said, come here with me. And I brought him into the bathroom, and I said, look in the mirror. And I said, that's who's responsible for you and your performance. I said, there's always somebody else you can blame. And I love what you just said. Like you said, I need to take responsibility for where I am and where I'm going. And I'd love for you to walk through that, because, you're coming from a family business, that's a huge shift going, leaving that. What did you go through as you processed that shift? Because that's what a lot of people, I think, go through that have had a career for 10 or 20 years like I did, and said, wait, I'm gonna move. I have to reinvent myself in a way to get, to change, to get to that next level.
Chris, what you did with your son is extremely important. It is okay, I think, in my opinion, for you to exhibit some type of victim behavior. You can go out and blame other people, and I think that's okay. Yeah. I sort of think that's healthy, because you're trying to regulate your emotions. And guess what? Maybe his teammate did suck. Maybe it was ultimately his yeah, it's true. Yeah. It could be, but that's not going to change the result. And I think that's the important thing. And I think what happens with most of us, and this is what happened with me, I wallowed in victimhood for too long. I was the victim. It was Obama's fault back in 2008. It was Bush's fault. Those banks getting closed on, all the bailouts, CMBS, that really all was happening. But when I woke up and opened my eyes, Chris, there were people making money. I wasn't one of them. So I have to realize I can be a victim. Victims, and then all of a sudden I start hanging out with other victims, and then all of a sudden I feel comfortable.
Yeah.
But
the crab's pulling, keeping you in the bucket, right?
Yes. And I think the problem with being a victim is there's no hope. There's no aspirations, because you can fall back and if you're comfortable, it feels nice to blame other people. You're seeing it right now. I mean, like, you can blame the economy, and you could be accurate, but there are people out there that are doing well. You could blame stuff. But I think what I ultimately realized was I can be a victim. I can realize that. But at a certain point, I can wake up and go, let me take the responsibility. I'll give you a quick example.
Yeah.
When, you have something going wrong in the business, it's okay to feel sorry for yourself. It's okay to feel down. It's okay to look at the problem. But at a certain point, that's going to stop serving you. And then what you need to do is to wake up and look at the problem and see the opportunity. Now that I reflect back on my problem that I had years ago, that was the problem. The Lord sent that problem to me. He gave me that problem for a reason, for me to wake up from my slothfulness, from actually not doing what I was supposed to be doing, from giving me a kick in the ass. And if he hadn't done that, I might still be in that situation. So I can look at that as an opportunity, and that's what victims don't do. They only see problems. I think people who really conquer their lives, or really a master of their own lives, are having the same problems as others. But we can ultimately sit back, wallow a little bit, but then say, okay, where's the opportunity, or how can I fix it? Or what's the solution look like? And we have hope of being able to fix that problem.
Yes. And that you made a great point there, which is it's okay to be a victim. It's not okay to stay a victim. And, if you have something that happens, one of the things that I've seen over the years of doing this podcast is people that are successful, they're not free of mistakes. They take those mistakes, they take those setbacks, and oftentimes they say, and it's incredible, you hear the worst thing that happened to them, they come back and say, that was the best thing that happened to me. That was a pivotal point in my life that changed how I appreciated things. I often talk about losing my best friend when I was 19, he was 18, and it totally changed the way I looked at life. I said, wait a minute, like what if I died tomorrow? It's like, I'm only 19 years old. You don't die at 18 years old. You don't die at 19 years old. You're going to live, quote unquote, forever when you're that age. You think you're invincible. But I realized, I'm like, wait a minute. I was racing bikes at the time, Gino. And I said to myself, am I really going to be happy, with riding my bike around in a circle if something happens to me? I need to get more out of life and do that. So I do love what you said there. And that's a really important point, that it's okay. It's okay to have been a victim. It's not okay to stay a victim. It's, you take a look and say, what can I do to get out of that? So tell us about that shift where, you went, from that period in your life and ultimately transformed to where you are today.
Well, it started early on in my investing career. I always share this story about a gentleman that I call Maserati Mike. I'm sitting in my restaurant one day outside in the parking lot, hanging out during lunch. It's a nice, warm, sunny day. In strolls, there's this nice gold Maserati. The hum of that Maserati, that engine. It just sounds wonderful. It looked sharp. And I remember saying to myself, I want to own that car one day. That's the car that I want to drive. Out comes this portly guy. His name is Mike. I called him Maserati Mike, and he sits down next to me on the bench and he says, I've got this mobile home park deal. You want to invest with me? Now, I had been introduced to him by one of my really good friends. So I said, sure, Mike, I've got money here. Let's do it. Now, the problem with that is I knew nothing about mobile home parks. I knew very little about Mike. Did I get my butt on a plane and fly down and look at the most mobile home parks? Did I know how to underwrite a mobile home park deal? Did I know what due diligence was? Were we creating a syndication and we had no docs? I mean, it was a disaster from the beginning, but I still went ahead anyway. Didn't know anything any better. I was looking for a deal, signed the docs, 6 months, we got paid. After 6 months, payment stopped. After 12 months, went to foreclosure. Now, Maserati Mike, don't know what happened to him. He didn't have any money in these deals. I lost 172 grand, and a painful lesson. And for me, that's where the journey started for me. I was a victim. I was annoyed, more than annoyed, for a couple of years, but it was my fault. Ultimately, I had to start taking responsibility because I invested in the deal. I didn't do all the legwork. I didn't understand the opportunity. My values did not align with Maserati Mike's. And that's where, for me, it started. And I got into real estate, into multifamily specifically because of that. Because I'm like, I can't get into a business without really learning it. Let me learn the business. Let me learn what underwriting is. And if I had known that, it would have been 10 minutes looking at his deal and say, well, Mike, why aren't you putting any money into this deal? I could have asked better questions, but I didn't know what kind of questions to ask or what to look for because I wasn't prepared.
Yeah. Yeah, and that's a great point. And I think that's a challenge when you're starting out. You don't know what you don't know, and that's okay. And you can look at a deal, but you could look at that deal and say, hey, let's go into it as if I'm going to invest and walk through it, watch this deal for a while, and see what comes out of it. And out of that, I know you're now 2,000 units, nearly $500 million in assets. You've not only have you learned a lot of lessons, but you've got a framework that you've put together that you teach people. And I'd love to talk a little bit about how you develop that framework and how our listeners can use that framework when they go into a deal to help avoid some of the pitfalls that you faced, that I faced.
I'm going to share two frameworks. And the first one really centers upon Maserati Mike's story. Now, if I had this understanding, I would not have invested in Mike's deal, or at the very least, I would have done a lot more digging. I call this the passive investor framework. This is for anybody who's got money sitting on the side who wants to invest in an opportunity, whether you're investing private money, whether you're investing into a multifamily, whether you're investing into a real estate fund, whatever that is. 3 steps. I want you to think of the jockey, the saddle, and the horse. Jockey is the first part. That is the sponsor of the deal. Maserati Mike was the jockey. Now, what most passive investors do is they go to the horse, which is the third part, or the deal itself. I went right to mobile home parks. Right?
See, I thought his horse was going to be the Maserati, but I got it now.
It could be, but in this analogy, but unfortunately, it's not that way. But follow me here because this is important. Because when you talk to any private equity person or anyone in VC or anyone, I was just speaking to somebody about franchising. They don't care about the franchise. They care about the person. They care about the jockey, who's putting the hat on and who's riding the horse. If Maserati Mike was a really good sponsor, knew what he was doing, did what he said, it would have been a very good opportunity. He was the total opposite. So when you're looking at investing in real estate, or you're looking to invest passively, look at the sponsor first. Their track record, how long they've been doing it, they communicate. That's important. That is the most important thing. The second one is the saddle that the jockey's sitting on. The saddle is what I call the alignment of interests. Do my interests align with Maserati Mike? And they sort of did, but they sort of didn't. Number one,
no money
Mike
in the deal. Yeah.
Well, Mike had no money in the deal, which is it could be a good or bad thing, right? But in that case, in my case, it was bad because if the deal went belly up, Mike doesn't care. Mike's going to lose. The other component is, did I have any idea of how long Mike was going to keep my money for? I didn't have an idea of the length of time, right? I didn't understand. Our interests did not align in so many different ways. So when you're looking at a deal to invest as a passive investor, look at the sponsor. If that works really well, now look at your interests. Are you looking to have your money there for a year, 3 years, 5 years? Are you looking for your money to come back with a refi? Or are you looking to keep it there? It has to align with the sponsor. Is the sponsor charging you a lot of fees? I mean, that has a lot. Does that align with your interest? Why is the sponsor charging these excessive fees? Ask them. And the third one is the horse itself. Now you're sitting on this horse. The horse is all about my framework of buy right, operate, and exit. Now that you like the sponsor, your deals are your alignments are all, he's going to have my money for 5 years. I'm getting my money back in the refi. All that works really well. Now let's start looking at the opportunities. Yes. Now you have to look at the opportunity through the buy right, operate, and the exit. That's a separate framework in and all of itself. But if I had done this and I had looked at Mike from 1 and 2, I would have looked at the deal. And then my fault was that I didn't know what buy, operate, exit was in the mobile home park space. I just didn't know what that meant or how that framework worked. And you can use that framework, buy, operate, and exit in any investing deal, whether you're buying a business, whether you're investing in a single family home, multifamily, self-storage. I needed a framework because I wanted to have something that was replicatable. So when I looked at a deal, I could tell if it was a deal for me in 10 or 15 minutes. And then obviously you trunk it down, you drill it down, but I can't spend hours and hours looking at an opportunity. I have to be able to spot one quickly and be able to act quickly.
Yeah, I love it. And, at your point, at our point, it's more of saying, hey, what deals am I not interested in?
Yes.
Having that framework of where to say no. Mm-hmm. And I think that's the challenge of new investors face is they're like, hey, I'm just happy to have this deal. And it's like, it's okay if you wait 6 months or a year to invest, go through that process and say, hey, is this the right sponsor? Is this the right structure for me? And that's what I've seen with investors that aren't happy. The majority of them, they didn't, they said, hey, this deal looks sexy. My friends invested in it. This sounds like a good fit for me. But, I need the money back in 2 years for, retirement or my kid's college education. And, they think, oh yeah, it's gonna be great, but it really doesn't align with their needs at the time. And, it doesn't take a lot of time to figure that out, but it does take some introspection to understand, what you want and what is a good fit.
Great point. We get caught up in the emotional aspect of it. And that's what great salesmen, great people raising capital do. They get you all riled up. Maserati Mike sitting on that bench with me got me jazzed up. He pulls in a shiny yellow gold Maserati. I'm already hooked. I want to be like Mike. And that's the important thing. I never stopped and thought, oh, wow, this is seed money. Real estate is risky. Anybody listening to this, there's nothing guaranteed. Not any venture, whether it's single family homes, whether it's crypto, we're all risking our capital. The first question you need to ask yourself when you're aligning your interests, and Mike never told me this, or most syndicators will never tell you this, are you able to lose that money and still pay the rent and still pay the bills? That's a great sponsor. Like, they're actually looking out for your interests. They want to know about you. Yeah. Like, if I'm going to be raising money from Chris, I want to make sure that Chris is the right fit for me. Because I'm a sponsor. I don't want Chris to be a pain in the ass in my deal. Like, Chris, don't call me up every 2 weeks to see where collections are. That's not what I want as an investor. So it works both ways. If you're listening to this and you're a sponsor, you can use this framework as well to weed out all the investors that you don't want in a deal. You can figure out, I'm going to be going for long-term holds. That's the kind of investor I want. I'm going to sharpen my saw and focus on that. investor. And I think that's important. It's about the
Very
communication
important.
with the sponsor and with the investor itself.
Yeah. No, that's excellent. That's a conversation I've had with investors numerous times, which is, hey, if you want to pick out the carpet and you want to make these decisions and do this, like this deal isn't for you. Maybe you
Not
should
for
be
you.
doing your own deals. Like we're going to give you our monthly updates, but if you got to know every week what's going on and have these questions, and it's like, well, I don't know if I agree with this or that. It's like, okay, this might not be the best fit for you,
Yes.
and that's okay. That's actually better than okay. It's better to know that going in on the front end. So I'm glad that you really underscored that point.
Mhm. Interest aligned, right? Your interest aligned with a
Absolutely.
sponsor. You don't
Yeah.
need that money because your business is difficult enough. You're running the day to day. That's your job. As an investor, if I'm not comfortable with that, then I should not be investing in that deal.
Yeah, absolutely. Excellent point. And I think a lot of heartache can be avoided by going through those first two steps before you even look at
Yes.
that deal
Hmm.
and do that. And I've had that conversation with investors. I had one good friend of mine. He sends me this apartment deal in a little town. I'm trying to remember where it was, but it was in Alabama. And I said, "Hey, like, why are you interested in this?" He's like, "Oh, I'm not. I'm not nothing particular, but it looks like a great. It was all the things that you said. Oh, looks like a great deal, this and that." And I said, "Well,
Hmm.
let's walk this back. What are you looking to invest in? Who is this sponsor? Have they done deals like this before? Is this market going to support it?" And very quickly he came to say, "Oh yeah, this is not a good fit for me." And maybe it was a good deal. I don't know. I never saw it come across, but he didn't invest in that. So,
Hmm.
again, have your framework, understand, who the sponsor is, understand if the structure and the time period and the return structure, fees, et cetera, fit your criteria. Then and only then look at the deal and do that. So I love that,
Yes.
Gino. One of the things that we were talking about before the show today was you got your great website, Barbaro 360. I was going through it beforehand. Ton of resources there. What really resonated with me, and I think a lot of our listeners, is that myself, a lot of listeners, they have a great career, they make money, they've invested, they've started to create financial independence for themselves, but they don't know how to translate the lessons that they've learned to their children, and they're concerned.
Mm.
How do I teach my children? Am I giving my children too much? Am I not giving them enough? You hear Warren Buffett say he's going to give his children, he gives them like $10,000 a year. Maybe it's 19,000 now, with the limit, because he wants them to go and make their own way. Tell us a little bit about Barbaro 360 and what that's all about.
I was influenced highly by David Green, the founder of Hobby Lobby, over the last couple of years. I read his books
Yeah,
and his
yeah,
charitable donations. I mean, he nets
yeah.
$1 billion a year, a private company, right? And he
Incredible, yeah.
does it. And what his premise was that he doesn't really own anything. It's really, God really owns everything, and he's
Mhm.
just a steward. And if
Yeah.
you could take that mindset of you're just being a steward here, well, then
Mhm.
you're responsible for this wealth. I mean, like you can create a lot of impact.
Yes.
You can do whatever you want with this wealth, but then you also have to prepare the next generation. And
Yeah.
it doesn't mean that my kids get into the real estate business. I don't think most of them are. I think maybe one or two may, but I still want them to contribute to the legacy of the family. I still want to teach them about skills in finance. They all have E-Trade accounts. They all have their little businesses going on. I've helped them how to open up their LLCs. To me, legacy, as I mentioned to you earlier, it's not something that you leave behind. It's something
Yes.
that you activate while you're here. And my three-step
Yeah.
framework on legacy, really faith and values. That's the first part. I think the second part is the financial, where everyone focuses on that. And the third one is the family and the leadership. I think if
Yeah.
you can break it down into those three pillars, it becomes a lot clearer because most of us focus on the financial. But in the family part, there's two components in the family part. I think most people don't think of. It's the human component
Mhm.
and the intellectual component
Mhm.
of the family. And the intellectual component is what we're doing right now. I've written books. I've done tons of podcasts. I actually have a podcast with my son called the Happy Money Podcast. That podcast, as I'm doing it, every time I do it, I know that that's going to be a legacy for my grandchildren. They're going to see their
Yeah.
dad on with their grandfather talking about money and not
Yeah.
being afraid to talk about the concept of money and
Yes.
teaching people. And they're going to learn from that. That's an important part, the human part. That's the intellectual part, the teachings, the learnings. The human component of you're talking legacy is also really important. Each child has their own unique gifts. Now, I've been
Yes.
fortunate over the last several years to accumulate wealth and to have each one of my children focus on what they love to do. I'm not telling them to go to college and get a good job or work here. Focus on what you love to do because I need your human components. I need the things that light you up, the
Yeah.
value that you bring to the family. I want you to bring it into the legacy component. So as you go forward, your family, your component can shine. And if you can put that all together in the legacy, that'll continue to grow the family legacy. It won't die because the financial at one point will run out if it doesn't get replenished by the human component
Yes.
of the family and the intellectual component. The family still continues to need to learn how to grow and earn. But it comes from the human component. So we have to focus on those three. And if you could put all three of those together, I mean, you've seen the families that have done it. I mean, you've got the
Yes.
Rockefellers, they're still around. A
Yeah.
family that didn't do it were the Carnegies. I mean,
Yeah.
Andrew passed away. His
Yeah.
son, who inherited it, doubled the fortune. But after his son doubled the fortune, it's all downhill from there. And you see the
Yeah.
gentleman on CNN, he barely can get a job on CNN. I always
Yeah.
forget his name.
Anderson Cooper. Yeah.
Anderson Cooper.
Yeah, Vanderbilt.
The Vanderbilt family. I'm sorry, that's not the Carnegies.
Yeah.
The,
Oh,
well,
that's
the
okay. And I know that because I live 2 miles from the Biltmore House, which
yes.
yeah. So I use that as an example all the time, Gino. I'm glad you brought that up. And you say, how could you lose like $1 billion in today's wealth? It's like it's almost incredible. But
Very, very easy to.
yeah, but they didn't
Chris,
focus on the family and leadership component.
yes, and it's not even that. It's the values and the human component. They weren't taught. All of a sudden, they started to atrophy. They didn't even maintain. If you could at least maintain the family structure and the family office, right, and then not spend so frivolously, do you need 12 mansions? I mean, does the family need that? My kids are taught that. That's to me, that's frivolous, right? Once again, I don't own it.
No Maseratis.
Yes, we can still enjoy it, and I still want them to buy their stuff. But at the same time, they need to contribute to the family to be able to take from the family flag, from the family fortune. And that's what ended up happening with the Carnegies. They weren't providing their human and their intellectual capital. They were only leeching and drawing from the capital itself. And it's funny, the Carnegies ended up happening the same thing as far as the Carnegie family. And you see a lot of these families, they create such massive wealth, but there's no values behind that massive when they leave. And that's what Vanderbilt said. He said to his son, don't split up the family, keep the family money together. And, the first son tried to do it. He did a good job of doubling the fortune. But after that, it was, shirt sleeves to shirt sleeves in 3 generations.
Yeah. Yeah. And it's a cautionary tale. And I think, it fits very well in today's world, because there's more information than ever before. It's easier to educate than ever before. You don't even have to go to college. I remember having a conversation in a hospital lounge one day, and this young gentleman said, everybody deserves the right to an education. It should be free. And I said, yeah, we already have that. And he just looked at me like, what are you talking about? You got a phone in your pocket? He goes, yeah. I go, show it to me. He pulls it out. And I said, right there in your pocket, you have more education available than I had when I was in college. And it was funny because you could see the light bulb kind of go off in his head. But the other thing that we crave more now, people are afraid of AI, but AI doesn't have that human component that you mentioned, Gino. And my hope and my optimism says AI is going to allow us to free up our natural creativity and those things that we really were put here to do. I think, as we were talking about before the show, critical thinking, being creative, bringing your God-given human talents to the world to make that impact. And if you teach the money rules to your family, if you create wealth and you teach these rules, then not only can you make an impact, but your family can continue to make that impact. So I love how you kind of outline that very, very clearly here. I'd love to. We could talk for hours. I feel like, Gino, but you do have tremendous resources. You've got amazing, company, amazing portfolio that you built. For our listeners that want to learn more about that, get in touch with you, get some of your resources. I know you even got a free book on here, which I love. We give our book away for free. What's the best way for our listeners to get a hold of you?
You can go visit 2 websites. The first one is jakeandgino.com. That's where we have all the real estate stuff. If you want to, get the Jake and Gino podcast, I do a how-to on real estate. It's on there. And if you want to learn more about the family, it's Barbaro, Barbaro 360.com.
Awesome. And we're going to have all that in the show notes, Gino. Love to have you back on, continue this conversation. It was wonderful to have you here today. And thank you for sharing all your wisdom and these fantastic frameworks that our audience can listen to and use in their own personal circumstances.
Chris, thanks for having me on. 300 shows is a mass step. And, for the next level, I'm hoping that I can take this year my next level. Thanks, brother.
I love it. Me too. I hope I can join you in that endeavor.
Hey, Chris here again. I hope you found this episode valuable. Now, I have one more thing to gift you. We have a page for my coaching clients where you can get a free copy of my book, as well as much more from previous guests on the show. Just check out nextlevelincome.com/coaching to get a free copy of my book, audiobook, and much more. I'll send you a copy of my book and cover all the shipping costs as a thank you for listening to the podcast. Also, please like, share, and take just 90 seconds to give us a rating on Apple Podcasts.